Hello, everyone, and welcome to the NASDAQ Dorsey Wright podcast for the week ending on May 26th. My name is Ian Saunders, and joined as well here by David Clark. David, it's good to be here talking to you on the last couple of days of the week. We're recording this on Thursday prior to it being released on Friday. But a holiday weekend coming up. You got any big plans?
Mostly just a lot of relaxing because it's a holiday weekend. That's generally what I go for on the weekends, is maybe some relaxing, a little bit of golf. But it's not for a lack of things for us to talk about for today. That's for sure. It's been pretty active this week in terms of after really what was almost what seemed like a month and a half period of what felt like not much to talk about. The past week has been fraught with things to talk about in a variety of ways.
Yeah, absolutely. I mean, you think about, at least when I think about holiday week, relaxing is a term that comes to mind for me too. And it's usually pretty relaxed week for the market, right? I mean, a lot of times people are ready to get out of town for the weekend. People are not necessarily going to be sitting there, especially later in the week, maybe checking their phones, checking their accounts as much as they frequently would. Nonetheless, we come in here on Thursday at the time of this recording. You have the S&P up almost 1%. We see the NASDAQ 100 index up over 2.5%, right? I mean, that's really the big story at the end of this week and kind of throughout movement we've seen over the past week, which we'll dive in here today, is just continued outperformance from some of these growth areas, these technology areas that just when you thought they couldn't go any higher, David, they keep on climbing.
Well, and it's one of the things that last week, whenever we started to see some of these indices, especially like the NASDAQ Composite and NASDAQ 100, come up to those resistance levels that really kind of conjured last year, sort of at the end of 2022 of, okay, we'll get this rally and then it's going to get rejected again. So everyone was sort of waiting with bated breath to see if it was going to break down. And then we finally got a breakout, almost to somewhat of our surprise in some fashion, especially on both that NASDAQ Composite and NDX chart. On the chart of the NDX, seeing it move above resistance that dated back to August of last year, being the first index to really do so. And prior to that, it had given 3 consecutive buy signals with higher tops, higher bottoms, and there's not much more we could look for out of a chart, really. And even when we thought it couldn't go higher, you know what, it proves us wrong again. Just shows sometimes what our forethought can be, how accurate it can sometimes be.
Yeah, absolutely. I mean, we mentioned the NASDAQ 100 up a little bit for 2.5% today. You're breaching that 13,900 point on the NASDAQ 100 index, kind of creeping back up toward that 1,400 point. I've got a line of demarcation, pretty notable level, 14,000 there for the NASDAQ 100. But like you touched on, I mean, 3 consecutive buys. You had the index up 24.36% on a price return basis through market movement on the 24th. So on May 24th, up a little over 24%, right? Mm-hmm. Pretty solid start to the year. I mean, you almost have to do a double take when you see, we haven't even finished the month of May and the NASDAQ 100 is up over 20%. You're like almost 25% year to date. So
still we did more trading days.
Exactly. And you're up another 2.5% today. We did a little bit of kind of diving through. So interestingly enough, if you go back historically in the NASDAQ 100 index, if we'd ended trading yesterday, so not even including Thursday's trading, with that 24.36% gain, this would have been the best 5-month start to a year the index has ever seen. So there's been better 5-month periods on like a rolling 5-month basis. But 2023, at least at this point, like you said, we still got a few trading days left. So hopefully it doesn't give it all up in the next few days.
Right.
But that the best 5-month start to a year we've seen for the NASDAQ 100 index. And so I think that's, David, a lot of kind of what we want to talk about. You're getting some of these names getting into a little bit overbought posture, but you've seen a lot of consistent improvement. It's not a straight column of X's up for most names, although some straight column of X's up for some names, some of the larger names have certainly led some of these indexes higher. A lot of the movement, the improvement you're seeing today, and a lot of these tech stocks and the NASDAQ 100 especially, I mean, we would be hard pressed not to talk about NVIDIA's move. I mean, it is historic to say the least.
Well, and generally, much of the conversation on that improvement in technology and a lot of that improvement behind the NDX prior to this was due to semiconductors. And in many ways, we're now getting further affirmation of that because Nvidia just gives us record earnings and ends up adding or potentially having the one of the largest one day increases in market cap occurring today. So to watch it, and as we started this, it was kind of interesting for us to think back. 5 months ago, Nvidia was $150 stock. It's now just shy of a $400 stock. I mean, as far as a prime example of a stock that you really kind of sit there and go, how much more does it really have? Can it really keep going? And it proves you wrong. So
Yeah.
it can be frustrating at times, but if you own it, it's a great situation to be in. But again, Nvidia is not the only one that we've seen have this type of positive action, and people have looked at and said, I don't know if I want to buy it just yet because I'm not sure if it still has any more left in the tank. I mean, there's a bunch of others within, the NASDAQ 100 on its own. I mean, Google's pretty extended right now, along with some other charts. They're extended. They're a little bit overbought territory. Folks are sort of sitting there wondering how much more does it have to go. And NVIDIA sort of gave us an example that, with earnings season, there's a possibility anywhere we could see it
Certainly.
really be a bolster for further upside. And it's a positive for us, but it's not always easy to try to weather if you're not participating in it. But again, the semiconductors in general, and especially today with NVIDIA's rally, breaking out pretty significantly, it just continually proves to us that the NDX has that leadership and really has been carrying that baton for, now 5 months, man.
Yeah.
Really,
and
honestly, going on 6 and possibly even 7 if we really look at it.
Yeah, absolutely. And I mean, when you look at that, David, I think a point that you brought up that is, pretty important to note. I mean, it's just looking at the chart of NVIDIA, looking at the chart of any of these names that, NVIDIA is up over 100% before today's 24% move at the time of this recording, right? I mean, you look at 100% gain, there's no way that can't go any higher, right? And then you see it continue to go up. I mean, the chart itself, if you cover up the performance, you cover up the name, you're just looking at the chart for the last 3 months. I mean, you saw it move lower, give a sell signal or last 4 months. So in February, it went up significantly, kind of reached the rally high around the 228 mark, formed a double top, moved lower, gave a sell signal at 208, your classic shakeout pattern, right? Mm-hmm. Turned right back around, headed higher, gave a buy signal at 232 to complete that shakeout pattern, that kind of near-term trading pattern. You got some further follow through to the upside on the back of that. Then you got throughout most of April, just some consolidation. I mean, the stock was up pretty high at that point, right? And you saw that consolidation for NVIDIA translate into a lot of consolidation in a lot of other semiconductor areas. Some areas backed off quite a bit. NVIDIA kind of hung around, didn't give a sell signal, maintained a trading range between the kind of 264 and 280 point. And then we saw it break out to the upside in May. So you got a couple more buy signals, rally high at 316, and a pull back down to the 300 level. So you look at that movement and you see that kind of consistency, the steadying off, the move higher, and then a pullback from that rally high. Before today's move, NVIDIA was only 56% overbought. So it was overbought, right? But it wasn't massively extended like you might expect on a stock that's up 100% through the first 5 months of the year.
For the first 5 months of the year, you would anticipate that might be a possibility, yes.
Yeah. And so I think that just kind of puts in perspective of, you might not want to buy it now at 388. It's well over 100% overbought from a weekly overbought oversold.
Probably going to be one of the highest OBOS ratings we're ever going to see on the system when you come in tomorrow. Exactly. It's going to be well above that 10-week trading band. But I mean, to your point, and to reiterate, in terms of when we're talking about what we look for out of a point and figure chart, series of higher tops and higher bottoms leading to buy signals, showing, that movement from the lower left to the lower right, again, covering up the chart. It's ideal looking at him covering up the name and just looking at the chart. It's pretty ideal in terms of looking at chart formation. And it's a name that just based on the chart, you would have wanted to own this year. Now, obviously, removing the name, you really want to own it, or removing or uncovering the name, you really want to own it. But it even when there was that moment that, and I would say it's probably been for the past month and a half, and you see that on the chart, that folks even kind of continued to say, like with the NDX, is there enough? Is there even more left in the tank? Or are we going to really be able to see it break out? Because 2022, we kind of got bit a lot of times whenever we would do that. But it appears we're seeing some different divergence in that manner, that we're now getting breakouts above resistance. We're seeing stocks that really, in ways, everyone on Wall Street said they can't. There's no way they can keep going higher, and they continue to do so.
Yeah.
No matter what our thought is.
Yeah, for sure. And you see that. I mean, I think that just it reminds me of as well. I mean, we have a lot of different kind of models on the site that look at momentum trading, right? You're trying to hold on to winners like NVIDIA as long as possible, right? And when you think about a lot of those models and you think about a lot of the technical approach, I mean, in any momentum following approach, not every trade is going to be an NVIDIA, right? But it's the NVIDIAs that make momentum worth it. I mean, that's the kind of name of the game, right? And so when you're looking at some other areas that are showing improvement, it's not just NVIDIA in the technology space. Like you said, it's other names in the NASDAQ 100. And we saw that reflect in some of the Dolly changes too, with the asset class continuing to tick up, the technology sector continuing to add buy signals over the course of the past week prior to this move from NVIDIA.
Right. And would not be surprised to see it pick up even more buy signals after today. And it moved up this past week to that number one spot for the first time since January of 2022. So
21, I think.
21. Okay. Right. It's been, at a minimum, at least a year plus. So now seeing that technologies moved back into that top spot where it spent much of 2022 in the lower half, or really near the bottom of Dolly, now emerging back again. Obviously, as we talked about, pretty boosted by a lot of that performance among those larger cap tech names like the NVIDIAs. But it is also, I think, something to keep in mind that we're seeing that leadership now. It began to sort of come to light really at the beginning of the year, or sort of latter half of last year, when we saw technology move into the top 5. But we've had a lot of interesting action that has taken some time for all that to transpire and really say tech is the leader now. You could have conjured that and maybe made the claim the past 3 months, but there were times that other places in the market have really resumed some pretty decent performance. But now you really see tech holding on pretty firmly to that leadership baton and really off to the races, if you will, it seems like.
Yeah. I mean, you look at like in March of this year, I mean, tech moved back into, March of this year, tech moved back into the top 3 positions. It moved into top 4 positions in March, continued to tick higher up into the second position by the end of the month. So you're right. January of 22. I was looking at end of month deals. So you're right there. It's been over like almost a year and a half that we've seen it lower ranked. And in that January, December timeframe, December of 21, we didn't see it hang around for all that long. It didn't hang out in that number 1 spot for a while. But if you go back to before that, right, if you're looking back into the time period and like the prior to the 2020 decline throughout prior to the end of 2020, I mean, you saw a long consecutive stretch of technology hanging on to that number 1 spot. So whether or not we get another 3-year stretch of technology getting the best performing sector in the broad domestic equity space doesn't necessarily mean that. But I mean, we have seen prolonged periods when it moves into the top spot. It doesn't generally have a tendency to just go up and go right back down.
Right. It's not, sometimes we have that thought whenever it comes to another sector, namely thinking of energy. Sometimes it can be a sector that you can see it go up to number 1 and as quickly as it got there, end up back down at number 11, if you will.
Right.
Tech, although a volatile sector, hasn't had that history almost within the Dolly sector rankings, or sort of that checkered history. It's been a little more consistent whenever it's seen that type of reaction. And again, really, energy is the only sector we've ever seen pull that off of, the coast to coast move. But somewhat tech related, I also think the sector that has overtaken energy here recently has been communication services, which has been a doldrum sector. I mean, for 12 plus months, probably even longer than that, but has picked up signals of somewhat getting this participation in tech, where it can sometimes have a little bit of an overlap with some of those names in tech. Google's the main name we often think of whenever we think of that overlap between sort of technology, communication services. It's showing improvement. It's out of the 11th position. Obviously, real estate has occupied that position, but energy is now falling below communication services. And, again, it's not necessarily to the extent that we're like communication services is the next best thing, just improvement. It's just something that we're seeing predicated off of that technology improvement that we're now seeing in another sector that have been really beaten down for the past 12 months. So
Yeah.
it's at least worth keeping an eye on.
Yeah, no, absolutely. I mean, you look at that improvement, it's still down in the bottom half, right? It's down at the 9th ranked position out of the 11 sectors we're looking at in that DALI sector ranking. But if you look since the end of February, so over the past 3 months, it's picked up the second most signals of any sector behind technology. So I mean, that just kind of shows some of that you're seeing those two start to move higher. Technology is just seeing much more improvement. But that definitely is going to be an interesting place to monitor as we head into the summer months here.
Well, we'll continue to see if DALI can take more. It's giving that more offensive look right now, which is a bit of a positive for us. And obviously, many investors are more excited about being on the offensive side than defensive side. So nice to see that we're getting more of an offensive stance. We're seeing some more of these offensive sectors kind of move up the rankings within the DALI sector rankings. And right now, we have offensive asset classes sitting in the top 3. So at least seeing some positive signs here in 2023 after what was a rough 2022.
Yeah, absolutely. And there's some positive signs to take into what I hope, David, is a relaxing weekend for everyone after what's been a nice finish to the week here. So I think David, with that, I think that wraps up most of what we're looking to touch on with movement today. I know there's a lot of stuff to hit on this week, and hopefully coming in next week, we'll continue to have a lot of positive stuff to hit on as we look to move into the month of June here. So David, thanks for hopping on here with me, and thanks to all the listeners. Yeah, thanks to all the listeners for tuning in this week, and we'll be back to talk with you next week.